Thanks very much for joining us today. We're here to talk around cyber insurance and some of that fun. So really appreciate you taking the time out of your days to join us and share some insights with you. In terms of who we have on this call presenting, for those that don't know me, I'm Nigel Brown, VP of Professional Services for Microserve. And we are accompanied with Alex from Microserve, who's our cybersecurity specialist, is online as well. And we have Kevin and Wesley doing the presentation. So with that, why don't we dive right in? And Wesley, I believe I'm handing it over to you. So I'll let you kick things off.
Correct. Okay. So yeah, thank you for the introduction, Nigel, and thank you to Microserve for having me here today. Appreciate the opportunity to chat a little bit about cyber risk and cyber insurance today. It's a topic I'm pretty passionate about, and what I do kind of day to day. So just to kick it off, I think let's just to give a high level overview of the broadest question we can ask in this space is, well, what does cyber insurance cover? Why is my broker talking about it? Why are we having this webinar today? And before I jump a little bit into sort of the 4 key tenets of what the coverage is actually doing for clients, I do want to point out that cyber insurance is one of the newer lines of coverage in the industry worldwide. It's been offered for around 27 years, so which makes it obviously one of the newest lines of coverage. So the policy wordings tend to be incredibly broad and also incredibly nuanced across the industry, depending on which carriers you're with. There is not a lot of standardization on the terminology or the coverages that are being offered. I think with that being said, it does make that incredibly important for clients and for companies to understand that you need to partner with a broker or a risk management provider that is really willing to get into the weeds and compare the actual meat and potatoes of what these policies are offering, because you can see really broad ranges of coverage and pay for a policy that is not actually offering a lot of coverage. So first and foremost, when we talk about direct expenses on what these policies are covering, this can be anything in the case of a cyber incident or attack. This can be the cost of incident response vendors, so lawyers that can involve privacy breach lawyers, forensic services, and really any vendor you would need to recover from a major cyber attack. So, in a ransomware claim example, Arctic Wolf would be a great example of a company that would come in and assist with the forensics as well as the incident response. And then, there's a handful of law firms across Canada that really focus on privacy and breach response as well. So, and they're not cheap. They tend to be cheaper on these insurance policies than they are if you went to them directly, because of the insurer's preferred rates. Other direct expenses, so actual net income loss as a result of your networks being shut down or compromised, that is covered under here. In the case of a ransomware claim, if you actually go ahead and pay the ransom to the criminals as part of the negotiation, or have to restore data in some other ways, all those costs would be direct expenses that are included there. Indirect expenses, so these are some of the harder to define, I'd say, intangibles that really, depending on the wording, may or may not be covered. But there is, especially for public entities, so for companies that are publicly traded, there is a whole world of sort of public relations services and messaging that needs to happen in the case of a data breach or a widespread ransomware attack. But this can be other things as well, like lost customers, where there's a cost to either regain those customers, or there's a continued business interruption and PR costs associated with the claim when it hits the news. So, the bigger examples of this in the US, I'd say, would be, like a Target or a Sony, where the public relations hit they took, and actually the hit they took in the stock market for a short period of time there was actually quite large. And so that would be some of these indirect expenses that these policies attempt to cover, and that are a little bit harder to define as well. Liability of a breach. So, this can be anything from the liability that you owe to your employees. So your employees, you have a duty to protect their data and their personal information. So, this could be paying for credit monitoring for your employees if their data has been breached. This could be going through the regulatory investigation. So in Canada, that would be the cost of dealing with the provincial regulator as well as our federal regulator. And we have some recent new privacy regulation in Canada as well. So we have Bill C-26 and C-27 which are both making it more expensive than ever to respond to these regulatory investigations, and also holding companies to a higher standard. And there is also some new provincial regulations coming out. So Alberta, Ontario, BC, and Quebec are all, with Quebec kind of leading the charge on this, are all proposing new privacy regulation provincially to follow what the federal government's doing. There's multiple layers to this. There's a privacy commissioner in, the province you operate in that you have to report to, as well as federally that you have to report to. And these policies will cover the cost to go through that process, as well as potential fines and penalties in a lot of cases. And then last but not least, cybercrime. So this is one area of coverage where I would say it's actually far more common to get proper limits on a crime policy. So cyber insurance and crime insurance are actually two different policies. Cyber insurance will often give you a small sublimit for things like wire transfer fraud, social engineering fraud. However, I would say that for clients that really need a larger limit for that, so say you are a company that is sending out bigger wire transfers on the regular, you're going to get, say, a $100,000 sublimit on your cyber policy. If you need to cover millions of dollars in a potential wire transfer fraud case, you really do need to go buy crime policies for that, because those are the insurers that are willing to offer proper limits under those forms. And the coverage is just, it's better suited under a crime policy in a lot of ways. With that being said, doesn't mean you shouldn't be buying it on your cyber policy. It's a nice throw in. It's just something to be aware of. Okay, we can go next slide. All right, so yeah, talking a little bit about an insurance market in turmoil and what that looks like right now. What is interesting about this slide, I think, is that we're actually almost coming out of this tumultuous time that we've been in. I'd say the pandemic was an incredibly difficult time for cyber insurers. A lot of them were running incredibly large loss ratios during the pandemic, and this chart really shows why, showing what that instant growth looks like over the course of that couple of years. So it was not uncommon. All this is publicly available information. You could see, I see Emily, you've raised your hand. Do you have a question there?
No, that was an accident, sorry.
Oh, no worries. So it was not uncommon. I mean, this is all publicly available information, but it was not uncommon to see cyber insurers in Canada running loss ratios of 400, 500% year over year, quarter over quarter during the pandemic. Some of the reasons for that being is that cyber insurance was just incredibly cheap and readily available prior to the pandemic.
The companies that were buying it, sorry, I'm just switching over to speaker here. And the companies that were buying it were getting it cheap and were getting big limits for cheap. And so that's where that correction has kind of come from. If we can click through as well to the next one here. So yeah, just what I was talking about here. Cyber insurance really was catching up during the pandemic, both I'd say from a control standpoint and from a pricing standpoint, as evidenced by that instant growth. Let's click through one more. Yep. And just showing you really what was happening during COVID there was, for one, it was companies catching up on their side, on cybersecurity, allowing people to work remotely for the first time ever in a lot of cases, and trying to do that securely and configure those networks securely, as well as just the criminal activity truly did ramp up during the pandemic. Nation state actors and a lot of big criminal groups really were ramping up activity during that period of time. Good news being is that, we are seeing this level off. We saw 2023, the activity kind of leveled off and stabilized a little bit. And there's a lot of reasons for that. So cyber insurers are asking more from their clients now and from their companies that they're offering coverage to. I know that was difficult for a lot of companies during the pandemic. It was difficult to buy coverage. It was difficult to go through that process. It was often long and a difficult process and really frustrating for a lot of clients. But as a result of that, most companies are probably in a better spot now, cybersecurity-wise and controls-wise, than they were maybe at the beginning of the pandemic. So as a result of that, cyber insurers were asking for more from their applicants, and now we have seen actual instant improvement, which is a good sign. 2023, like I said, stabilized kind of at the end of the year, and then we'll see what 2024 looks like. unfortunately, kind of early signs in 2024 show that incidents are high and that activity is actually quite high right now. So we're going to see, I think, this kind of flip flop back and forth a little bit with incidents and how common they are. But the good news is that most companies are in a better scenario now than they were 4 years ago, right? And it's because they're working with vendors like Microserve and Arctic Wolf. We can go to the next slide here. Okay. Okay. So really quickly, just touching on what the security spend looks like. What I'd like to highlight with this particular slide, and I touched on this a little bit already, but what this slide does a good job of showing is not only the growth in spending, so companies are spending more in security, but there is a key point to note here is that cybercrime and what criminals actually make off of cybercrime is far more than this. We are still lagging behind what the criminals make off of hacking and off malicious cyber attacks. By some numbers, I mean, there's a bunch of different numbers with respect to what the true cost there is. But by some numbers, it's projected that it costs the global economy about $10.5 trillion every year. And that's, that number has only been growing. Like I said, it stabilized a bit in 2023, but we will see what 2024 holds, and we'll see what the years beyond that hold as well. So, as much as we spend on cybersecurity, we are still fighting a bit of a losing battle compared to what is made off of this. Cybercrime is also now the largest illegal industry in the world. It's more lucrative than the global trade of all major illegal drugs combined. So if we think about, what the cartels are making off of drug trafficking and all those other shady illicit activities, cybercrime outranks it all by a pretty good margin now. And so, there is some optimism here that we're doing more, but breaches do continue to go up, and people are still making a lot of money off this. So this next little infograph here, I think, is a good one because what it's showing, I mean, you'll kind of see where your industry ranks here as far as weekly cyber attacks per industry. So you'll see there's some big sectors here that are commonly targeted. Predominantly, these are sectors where criminals are kind of getting two things out of it. So they're getting valuable data. So the data is really valuable. There's a lot of personal information or healthcare information at stake. They're getting government or military secrets or intellectual property. And, with some of these public entities, they tend to have a budget where they spend a little bit less on cybersecurity. So they can be low-hanging fruit in a lot of cases. And they like critical industries, right? So, some of these cybercrime groups will say that they don't go after healthcare. They don't go after things like hospitals because, they have a conscience. But you'll see the stats just don't back that up. They truly do like attacking things that are deemed critical industries. The reason for that being is that critical industries have less leeway and less time to negotiate with criminals, right? So if your hospital has been hit with a ransomware attack, you can't spend a week going back and forth with the criminals on whether or not you're going to pay the ransom or not. You need access to your patient data. Otherwise, people could die from stuff like this. And so, unfortunately, the criminals know that. They know which industries are kind of on the clock when this happens. And they know what they can get for that. And so they know that, within 12 hours, you're going to need to do something, whether you can rely on backups or whether you can rely on your internal systems or your instant response vendors can get you going again, or whether or not you have to pay the ransom. We can go to next slide here as well. Okay. And actually, this is a really interesting slide. I'm assuming, there's probably a lot of technical people on this call. I'm not sure how many of you are insurance buyers at your organizations. But what this is really pointing to is, this is a survey from the Wall Street Journal. It's a recent survey from them. But what I really like to highlight here is that since the pandemic and since we've all, since the evolution of what we saw during the pandemic and what cyber insurers went through, now almost 90% of these respondents, of these corporate respondents, are paying more than they have in the past for the same level of coverage or for less coverage. And that's really important to note. Like I said, it's really important to understand the coverage you have and the coverage you don't have. Insurers can be a little sneaky with respect to how they sublimit coverage, exclusions and endorsements that limit, coverage in real world scenarios. There is kind of sneaky ways that they can pull those levers and give you less coverage for the same premium or more. However, I would say, so there is some good news here. I mean, this is predominantly, these are 2023 survey results. What I will say is that we are starting the year off in 2024 here with some signs of a softening insurance market, meaning that we went through a very quick hard market during the pandemic. We basically went from 2019, 2020, where cyber insurance was incredibly cheap, really broad coverage, and not a lot of people were buying it. 2020, a lot of people started buying it. We saw the claims start to roll in. Coverage got way more expensive, much more restrictive, and everyone wanted it. So the process became incredibly difficult for a lot of clients. What we're seeing now is since that flattened off a little bit in 2023, and cyber insurers did get a lot of rate during those years, we are seeing that early softening market, and a lot of people are saying it is a soft market now for new buyers and for renewals. There's also new insurance companies that have entered into the marketplace, both in Canada, the US, and worldwide, who are now offering coverage again. So there's some healthy competition happening here for the incumbent insurers. It is, like I said, it is kind of yet to be seen whether this trend will continue, because I think in a lot of cases, the claims activity has actually not dropped off. So, insurers are keen to gain or keep their market share. So they're probably giving decreases in price now, and they're giving away more coverage. But the actual claims activity has not dropped off in a major way. So it's kind of yet to be seen whether this is premature from a lot of the insurance industry and the insurance market, whether they're going to give away a lot of rates, and then in a year they're going to say, that was too much, that was premature, we need that back. So, I think no one has a crystal ball, but in a lot of cases, I think some people are saying that this might be a little bit premature. That being said, it's probably easier to get cyber insurance now than it's been in 4 years. And it's probably easier to do your renewal than it's been in 4 years. So that is a good thing. It's better for, it's better for the buyer. It's better for everyone. But keeping in mind,
I could attest to that. We just went through it inside of Microserve to renew our insurance, and that was the latest wait process I've had in the last 4 years. So if that's any inclination of hopefully where we continue to head, it was a pleasant surprise not getting another 40-page form to fill in.
Yeah, 100%. I mean, I think the red tape that we saw during the pandemic was incredibly frustrating for everyone, right? I mean, long applications, restrictive terms and conditions. I mean, pricing between 2019 and 2021 globally went up 185%. And so there was this massive swing, and arguably insurers took too much. They may have overreacted, and that's why we're seeing that maybe correction back. But yeah, like I said, I think it's yet to be seen whether or not that was an overreaction. At the same time, they were paying a lot of claims, and they still are paying a lot of claims. But an easier renewal is nicer for everyone. Broker, client, and cybersecurity vendors included. It's just better. But yeah, I definitely agree with you. No one likes long applications, and I think the industry is moving away from this a little bit. We're not giving people 40-page applications anymore. There's a lot we can do by working with cybersecurity vendors to understand what your systems look like without giving you a massive yes and no application, right? We can do some external scanning. We can run some reports. We can work with vendors like Arctic Wolf and Microserve to understand what your networks look like, and then just take that into the insurance marketplace and not make it super onerous for clients to go get coverage. So go next slide here. And I think I'm handing this off to Kevin now. I think this was your slide, Kevin. So I'll hand it over to you.
Yeah, absolutely. Great job. Thanks for those key insights there to the insurance industry. And yeah, here at Arctic Wolf, my position lies on our insurance alliance team. So I am working regularly within the insurance industry with brokers like Wes, and ensuring really that our clients understand kind of the things that Wes is talking about, and the ways that in which Arctic Wolf plays into things like premium. But beyond that, what limits do you need? Do you need to get more limits, by increasing your security posture, deductible management, and then yeah, being able to get kind of those preferred terms like Wes was talking about, where in the past few years, carriers have really tried to tighten up what it is that they're covering without really taking off much premium. And so we feel that with an Arctic Wolf solution, that our clients are best in class in security posture. And so the better that we can have a relationship with brokers like Wes, to understand what services Arctic Wolf is providing, the better it is for the client, as they're able to then communicate that to the market and advocate on behalf of the client, to get all of those things that Wes was talking about. So in this slide, it really, obviously all of this, these premiums are driven by claims. That's really what drives those ebbs and flows of the insurance market. And on this left side, you can see really what drives up claims, and on the right side, obviously, what drives down claims. So, um, you know, on the claims trends driver side, obviously the remote workforce really correlates to a trend in cyber insurance, much like Wes talked about, that kind of massive increase in premium. I mean, it's no secret why that happened right after the pandemic, when everyone was like, oh shoot, we can work remote. I know most organizations, uh, all of them that I worked for a couple over since the pandemic, every single one of them had a hybrid work model, and potentially, one that I worked for before that, they were in the office full time. They actually didn't even give laptops out yet. They still came in and worked on a desk monitor, which was, I thought, very uncommon, because I came in and they handed me a laptop, and when I found out this was like a new thing, I was like, oh my gosh. But I came in right during the pandemic, and so they switched immediately to this remote work style, and found out very quickly that, okay, this actually works. We can do this. Um, and so that really increased, the IoT environment that these organizations had. It increased what we call the attack surface. It led to a greater need for discovery and monitoring, of their environment, because of all of these types of devices that were now needed to enable that remote work. That broadened IoT environment, all of those different computers. People were adding their phones onto the network now. It's bring your own device, or have a company device. That's kind of a big thing. Again, broaden that IoT environment, and drove a need for cloud migration. You couldn't, now you've got more data being held. You've got more systems that are needing to be utilized. And so, there was a big shift towards the cloud as well. And that created an even larger attack surface. So now you don't have to just worry about your on-prem servers. You've got to worry about your cloud servers. Those new technologies increased the security system complexity down there at the bottom. So, again, you broaden your attack surface. You're adding these new things. You're adding new ways in which you get your data. That is going to increase the security system complexity. Now, you may have had one or two tools that worked really well before that time, and now all of a sudden you've got 5, 6, 7, I mean, anywhere up to a dozen tools that you need to be able to utilize to really have a secure system. Because, sorry, we're getting a little feedback there. Okay, we're good. But yeah, if anyone wants to jump in, feel free to say something. But yeah, it created that complexity, as there was just more areas to be able to get in. And you couple that with, a security shortage, right there, that leads to that, security skills shortage. And so not only do you have a wider attack surface, do you have more security system complexity, but you still have less people that actually have the expertise to be able to, really run those operations in an efficient manner. You've got people that are there that can, but one person is only so much, right? So even if they are incredibly gifted, there's just so many broad things that they have to be able to monitor and ensure are properly configured, that it's just very hard to do. So that even if you start to get these controls, it becomes an issue of like, okay, where's the efficiency? And so again, that created a more vulnerable environment, and then so you get more theft, you get more lost or stolen items. So that's where that lost or stolen items amplifier comes in. Due to that high theft and increase of incidents, complex environment led to more third-party involvement, such as suppliers, partners, governments, and the public now getting involved, saying, "Hey, wait a second, like you need to be looking after this larger attack surface, and you're doing all of these things, but you're not looking out for it properly." And so the incidents increased, right? And so that's really where you get down. So you can see how all of these things come together to drive those incidents, which essentially are claims. Ultimately, what claims are incidents and things that are needing to be responded to, whether it's your company directly or a company that you partner with because they had a system go down and now you've had a business loss. So that is kind of how those key cost amplifiers come together to create what you see there, which is hundreds of millions, billions of dollars in cost for these carriers, and why we saw that massive spike in premium, because they're like, oh shoot, we need to be taking in more premium or we're not going to be sustainable and this isn't going to work any longer. And so there was the premium increase, and then of course people then started to focus on these key cost mitigators, and that's really where Arctic Wolf kind of comes into the fold. I mean, Arctic Wolf was really designed specifically out of the situation that I described on the left, where we had seen, and the founder of Arctic Wolf had been working at security organizations and had seen just this massive, ever increasing use of security tools that companies had to implement, and just an inefficiency in the use of those tools. And so Arctic Wolf said, okay, we're going to create an organization that allows you to outsource some of that expertise, and we're going to build a platform around the ability to, yes, thank you, works well into the platform of Arctic Wolf's security operations. And so Arctic Wolf basically said, we're going to create this open XDR architecture, and we're going to have a concierge team that monitors it. And so you can see down here at the bottom, very bottom level, there are your endpoint, your network, your cloud, your identity access management, and then the human elements. And so those are, that's kind of the attack surface, right? And so you need to monitor and watch your managed detection response, your cloud detection response, your data exploration. You need to be managing your risk at all times. And so those key cost amplifiers led to this need for these key cost mitigators like employee training. So you've got right there the human element, and that's still widely the biggest way in which attackers get in is the human element. So you've got phishing campaigns that are run, and they're getting increasingly more complex. I can't tell you how many crazy stories where I'm like, wow, this is absolutely nuts that they're thinking of this. Just the other day, I heard of one, and this actually isn't even a cyber claim, but it's really interesting, where it was a construction company, and they had a physical truck pull up to a job site with an invoice for materials, and looked exactly like the invoices that they used, and so much so that the workers there believed it and loaded this truck up with hundreds of thousands of dollars worth of construction equipment, and they drove off the lot and brought it to some warehouse. And so the next question then is, okay, how did they get the invoice? So then you've got to start thinking about, well, they must have been in our system somehow, or a supplier system. So there's just so many ways that threat actors can utilize getting into your information. There's so many of them that from the human element, you click on that phishing email and they get access to your email. A lot of the times they will not do anything for months. They will sit there and monitor your environment. They will watch emails going in and out. They will get bits of information to be able to know a little bit more. Then they might be able to access another email or another system until they get to the point where they feel that they can utilize the information in some sort of attack like that, whatever it may be. And so, that employee training has become a huge cost mitigator on companies that do that, and companies that keep their employees informed on these types of attacks and how they're coming in and how artificial intelligence plays into it. They're going to be driving down that type of claim. And then, also again, the talent shortage has created a need for exactly this type of platform where, now organizations, carriers, and this has become a big thing in this year, are really asking for, okay, you've got your endpoint detection response, you've got your cloud detection response, you've got your phishing emails that are going out, you've got your training, but how are you managing all of these aspects? Are you seeing how often you're getting click rates? Are you acting upon that? Are you looking at your vulnerability scannings and actually, running, I'm sure everyone knows the word I'm looking for, actually patching them, right? And so, not all organizations have the expertise to do all this. So having that third-party resource to monitor that through the use of a SaaS technology 24/7, 365 is kind of becoming, and it's very, very newly, just this year, kind of being accepted as, okay, this is kind of going to be the next thing that we would like all organizations to have. I know a few carriers have openly come out and said that, and a lot of them are starting to realize how big of a cost driver or cost saver it is in claims. And so, that's really how that has evolved into this security operations cloud. And we can move on to the next slide. So, you bring those two things together, and it really is a need for a cyber insurance model. The entire industry and kind of how we've gotten from that larger up curve to that down curve has been, as Wes said, carriers kind of pushing the need for those types of key cost mitigators. They've been asking for proactive approaches. So again, just asking clients to have certain controls in place, actively making resources available to them to be able to talk about those controls and potentially, what can you do next to, what's the next step in your evolution of improving your security posture. It's been taking, again, just like we're doing here, the technology partner, the insurance broker, and the security partner to come together and say, all right, let's all be on the same page about what it is that our end client has as their system. And let's see how we can look at cyber risk management as a whole, to get them in the best position possible. And that includes, of course, transferring some of that risk, because there's just no possible way that we can avoid all of the risk. We can't mitigate out all of the risk. So you're either left with taking on the risk yourself or transferring that risk to a third party. And so being able to talk holistically about that and, have real conversations about where we're at with our security posture and how much risk we do need to transfer, is really where that joint planning comes in. And then you get into the predictive risk analysis where, we're sharing information, we're talking about what types of threats are coming in, and we're thinking, okay, what's the next step as far as, okay, we need to be ahead of the game. We don't want to be reactive to the threat actors. We want to be ahead of them. And I think that's really where, an incident response organization, which Arctic Wolf has as well. So that they work, we work both on the mitigation side and the incident response side. And I think having both of those units really helps keep kind of a pulse on what the threat actors are doing. You're seeing all of the new types of ways they're getting in. And if something seems weird or something, is comes out that we've never seen before, we'll put that in our threat reports. And of course, the mitigation side is getting that information and looking for it proactively. And so I think proper prioritization is very similar to a proactive approach, right? I mean, just getting in the mindset of, and I love the idea of like to change the mindset of, an audit mindset where it's like, okay, let's get these things in place. So if someone comes in and looks at our organization, we want to make sure we check all the boxes, but to actually going and again, using that joint planning to talk about where we're at with our security posture and how we can realistically look to improve it outside of just passing an audit. So we can move on to the next slide. So you've done all that, and of course, there's still going to be incidents. So I mean, an incident response plan is obviously huge. Make sure you have a good incident response plan in place. I'm not going to spend too much time on the types of incidents, but I still think, again, business email compromise, definitely a huge one that it doesn't always have to be a really, really large type of event. Again, that they can sit in the environment for a while. So you want to make sure you know if your emails are compromised, so that it doesn't lead to ransomware, it doesn't lead to IP theft, and it doesn't have to cause a data breach response. And then I would say certainly consulting with the Wesses of the world on which type of these incidents are covered under your insurance policy and making sure you know that ahead of time. Making sure you have your breach counsel and your IR vendor ahead of time, making sure they're pre-approved by panel. Those are all things that a broker can coordinate with you and the carrier as well. So you can go to the next slide.
I would also just that not all sectors or industries are built alike. I mean, so for lots of sectors, data breach is not your biggest potential loss, right? Because your data is, you don't have a ton of personal information. Your regulatory event's not going to be that huge. It may be even a operational shutdown. So for manufacturing facilities, the fact that some of this malware and some of this ransomware and some of this malicious hacking can actually shut down, a manufacturing facility, for example, that might be your biggest risk. There may be a real property risk there. There might be a real, liability risk there. So I think it's just important, I think, to have someone who sits down in a room with you and actually understands and really tries to understand what your biggest exposure is and ensures that the limits you're buying for that exposure actually match what you need, right? Because not everyone's going to have the same need for all of these different limits.
Yeah, that is a great point. Thank you, Wes. I think that, this slide probably isn't the best. There's much more incidents than those types. I mean, there's incidents that are just from simply, having a computer update go wrong, and it still does cause a business income loss. We saw that with AT&T, right? They were down for a few hours in the day, apparently from just trying to do an update. So we can go to the next slide. Just a quick overview of, an incident response timeline. You want your incident response to be within the hour. Again, minutes are huge in an incident response, and that is why, again, having that IR plan in place. And if you don't know what that looks like, I would say consult with either the security firm or the broker or both. Ideally, again, everyone's on the same page of who's doing what in what situation before these things go wrong, so that you can immediately get into containment, because that's the first thing you want to do is, all right, who's in, what's going on, is it contained? And then once you have it contained, then you're getting into potentially monitoring for additional activity, and you're getting into active defense of kicking the bad guy out, making sure they aren't into any systems that might be kind of vertical to where they were. And so typically it's important to have monitoring either 30, 60, 90 days after an incident. if you want, root cause analysis is definitely a bit of a hot topic. But if you want that root cause analysis, you obviously are going to need it contained first. You're going to need to be doing the monitoring. You're going to want to have them kicked out, and then you can start to get into the restoration and remediation. And I would honestly say I don't know why root cause analysis is in the middle there. I mean, restoration and remediation is probably right after you get containment and monitoring and active defense in place, and then you can go back and do your root cause analysis, which probably goes along with your digital forensics. And then, as I mentioned, you're going to want to continue monitoring after an event, and we can go on to the next one. So this just talks about how a severe incident typically is handled. But what I wanted to point out was, after an incident, I do think, again, it is very important to work with your broker and your security team on what happened. If you do have that root cause analysis, I think that's a great way to say, we've looked at what happened, and we're actively having these steps to have it not happen again. So I was on the broker side I was on the broker side, but previous to Arctic Wolf, I was at Travelers, and I was an underwriter for technology and life science organizations. And the biggest thing that we would want when a client had an incident is, okay, what did you learn? How are you improving to not have it happen again? And really just, are you more secure now than you were before? And I've seen some situations, and Wes, feel free to jump in on this, but I've seen situations where, clients have actually been improved based on having an incident. It's the most real world incident response, incident response plan that you could possibly have. It's not a tabletop, it's a real thing, and you learn from it. And ideally you're in a better situation afterhand. So, doing that root cause analysis and working with your team, your partners that are involved to be in a better position is huge.
Yeah, I mean, that 100%. I think if done right, almost 100% of organizations should be better off after an incident, as long as that incident didn't sink your business and you were able to move on from it. You should be a better risk coming out of it, and there should be some really, really valuable lessons learned. You need to make sure you survive it is the first thing. But if you out of it on the other side and you had proper risk transfer in place where you're not all of a sudden killing your balance sheet, you should come up with a better risk overall.
That's certainly from our experience where we've seen things go not in the direction we want. That is the side benefit, at least, right? Hopefully it was just a wake-up call and nothing severe, but that garnered some attention, potentially even for the first time, some investment where it's not, I think we're okay. Well, I'm paying for insurance, so we're covered, right? So, it started some dialogue, and that's been a trend where I've definitely seen it's an opportunity, from the IT folks to make sure the right invest is happening in the right areas, right?
Yep.
Yeah,
Absolutely.
and and from Arctic Wolf side, obviously, an incident or a security breach is the number one driver of purchases, but number two is actually cyber insurance. So people wanting to, again, have better risk transfer available to them. And we've worked with clients, on the insurance alliance team. I work with our clients and prospects, and we've had some that have had an incident and added Arctic Wolf. Now they have MDR. They've got that 24/7, 365 monitoring. They've got that managed risk. They're working on vulnerabilities. So, especially if it's a vulnerability that you had that caused the incident, and now you've got that vulnerability management in place. Absolutely, you're a better risk than you were before, and carriers should see that. Now, if you get into the claim still being open, then it can be a little tricky. But ultimately, you can come back better if you've had all the things in place. I'm not going to spend much time on this slide, so we can move on.
Okay.
And I think, Wes, you can jump back in here. That's what I was going to say.
Yeah, I mean, and to be honest, so we, that was really well done, I think. And I mean, you actually kind of hit all the key points there's a lot of alignment there between, I think, what Arctic Wolf is doing, what Microserve is doing as a MSP, and what the underwriters want to see, right? So these are all the things that got the hard. And I think most clients are pretty aware of what it takes nowadays to buy cyber insurance. They know what needs to be seen, and they kind of understand that, there are both minimum underwriting requirements, but there are also real business reasons to try to go above and beyond just what the underwriters want to see, right? I mean, at the end of the day, cyber insurance, if you're using it, it's going to be one of the worst days of your business's life, So you don't want to use it. You want to go above and beyond the minimum requirements that underwriters are looking for. But you did kind of touch on all the key points here with respect to what underwriters are really searching for. The only thing I'll just echo, I think, as well, Kevin, is like you said, 95% of breaches still come down to just some form of human error in their root cause. In a lot of cases, right? It's someone clicking on something. It's doing something maybe they shouldn't have been doing that got around your firewalls or your blocking. And so that's really big. I think employee training and awareness, and making sure that there's not a lot of shame in that employee training, right? So when people have to go to remedial training for failing a phishing exercise multiple times in a row, that happens. I mean, we're humans, and we are the ultimate, attack vector at the organization. There should be no shame in that, because it will make everyone better over the long term. And then just what you said, Kevin, as well, that first call when you get that ransomware claim or that data breach or whatever that might look like, on average, you can save a lot of money in the case of a claim when you know who your first call is and when you know what your first step is going to be. And in most cases, I think it's just really important to recognize that there are, cybersecurity experts, but then there are incident response experts, right? There are people that respond to these instances day in and day out. That is their day job. And, you should entrust them with the incident when it happens, right? They're going to ultimately get you a better result rather than, keeping it to an internal matter or, having someone who configures the network and, works in IT try to respond to the incident sometimes, right? I mean, you want experts within those organizations, or you want an organization that is the expert, right? So, and I would count, Arctic Wolf is up there as far as both being approved by insurers. So, on a lot of insurer panels already, paid for by the insurance companies. But yeah, also just well recognized as a robust incident response firm. So we can go on to the next slide here. And I'll kind of close off my part here with just talking about some of the other trends that we're seeing in just insurance wordings. So I know insurance wordings, it's not everyone's favorite topic. It's incredibly, it's a 120-page legal document. But there are some key things to consider here. So war and state-backed cyber exclusions. This is a really important topic because, there's a whole suite of new exclusions, and there's not a lot of standardization between kind of the worst exclusions you'll see and the more benign ones where, we would argue that legally they don't have a lot of teeth to them. But, what insurers are trying to do here is they're trying to manage their exposure to a state-backed attack that, damages critical infrastructure across like the whole of Canada, for example. Ultimately, what they're trying to do there is manage their aggregate exposure. So if you end up paying a claim, there's a widespread attack by a Russian state actor or by an Iranian state actor or North Korean or whatever it is, what they're trying to avoid is paying a claim across an entire economy or across the entire developed world. So like a cloud outage or something where it was a state actor that facilitated that. And then they're changing some of these definitions to kind of amend what the definition of war is. So it doesn't have to be an official act of war, right? It doesn't have to be a declared wartime act from the Russian government in some of these wordings. And so I think what's key about this is just understanding what your policy actually reads like. Get a copy of that wording, read that exclusion, and see if you're okay with it. And understand, what the kind of materiality threshold there is with your insurer. I think at the end of the day, these are going to be a fight with insurance companies. There's going to be a big incident. One of these exclusions is going to get tested and it's going to go to court. And so we're obviously all kind of watching that closely. But I think as an organization, it's important to understand what your policy does and doesn't do and really fight for the least amount of exclusion on this. Same thing with widespread events. So, similar to the war argument, widespread events, things like a cloud outage, there's some scrutiny around that, and there is some wordings that have come out that are either trying to exclude that or sublimit it, depending on how widespread the event is, or what it is, right? And so you might get 50% of your policy limit if the event is widespread enough, according to some policy definitions. So once again, I think just going into this with eyes wide open and really understanding what your policy reads like. And then same with artificial intelligence. So a lot of organizations, the insurance industry included, is now deploying AI, using AI within their organizations. It's important to understand also if your wordings have anything with respect to AI and the scraping of data from the internet, because what AI has kind of showed us as everyone is starting to use it, is that there is some litigation around this now, around things like copyright issues and who owns that data when OpenAI, for example, scrapes the open internet for it. The New York Times sued OpenAI for saying, well, your model was partially built by the fact that we have a repository of articles and research where hundreds of man hours and woman hours went into these articles over decades, and you just took it for free and used it to inform some model that you're now monetizing. So there's kind of an ongoing discussion there. We're not seeing a ton of wordings pop up where people are saying or are excluding AI, but we are seeing people start to propose products specifically to cover AI. And so that's something to kind of keep in mind. Something I think also to consider if you're considering using AI within your organization, right, is what kind of risk does that open you up to? And just understand that I think they're great tools and they should be used, but I think you should understand the risk as well with using them, right? Because it's always just a cost benefit analysis, and sometimes it might just not be worth it depending on what you use it for.
Yeah, totally agreed there. Yeah, I think AI, I never thought about it in the context of insurance, but you're right. I think this will be a growing area as we move forward with this whole new world of litigation and everything else that's going to come with it, right?
Yeah, and lawyers are great at finding the newest thing and finding lawsuits around it. So, currently this is more of a litigation problem than an insurance problem, but litigation ultimately does become an insurance problem at some point, because lawyers will find unique ways to tag insurance companies and insurance policies with these types of claims. But for now, it's just been open litigation. But yeah, it's an interesting space for sure.
Awesome. Thanks, Wesley. With that, I want to save a few minutes for questions, but wrapping things up, Wesley, Kevin, thanks for your content. Hopefully everybody's finding that pretty valuable. I know I certainly love hearing the refresher on this topic. There's a lot of areas where Microserve as a service organization can help. Many on the periphery of what we talked about in terms of mitigation controls, the data center environment, backup and DR solutions, multi-factor. But Alex, why don't you chime in and maybe talk a little bit more on the cybersecurity stack that we can help provide?
Sorry, I was on mute. Thank you, Nigel. I would say cybersecurity insurance is not a standalone product, and cyber insurance can help you in your security journey. And if you connect with our services, for example, you can leverage many benefits and could decrease the cost. So we are offering many services to help you on your security journey. For example, cloud security standards, security awareness, risk management with Arctic Wolf, for example, tabletop exercise, but I mean realistic tabletop exercise. Some companies have tabletop exercise just to following any kind of regulation, but we are trying to create the best tabletop and incident response plan. So within these services, we can provide vulnerability management, and we are responsible not just to alarming you, but mitigating the vulnerability in your company, for example, and increase your security posture. Just be aware, after all, soon we will be charged more because the Bill C-27 almost released in Canada, and the fine is so high. So be aware with that, people, and count on us to help you on your cybersecurity journey.
Thanks, Alex. Yeah, very good point with the upcoming bill here, right?
Oh yeah, for sure.
And with that,
I don't know if we have questions.
yeah, you'll see a QR code here. You can scan with your phone. You also see the mini chat for feedback. Love to get your feedback on the session. What you found valuable, where we can focus on. But with that, really appreciate your time. And yeah, let's turn it over. If there's any questions, we've got another four minutes or so here before we wrap.